The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. On this Wednesday, the 8th of March, we're looking at the Dow down 48 at 32,806. Very ugly candle yesterday. The candle that follows after that needs to fill in a little bit at least of that ugly candle and preferably close above the low. That's what we're looking at, and that's going to be very important. In the S&P, a different pattern. Still a very ugly candle yesterday, but a different pattern. It's just now under the 200-period moving average of 4,089. It's trading at 39.84. Did I say 39.89? Sorry, no, 4,009 at 39.84 right now. It's just down $1.78. Not bad, just kind of waiting for, I guess, the questioning to come to Powell and how he answers it. Looking at the QQQ, also a little different pattern. Also went to the Chapman Wave inside track repellent zone. Got turned down from that high on, there we go. Today's on Monday. And we'll see if it's able in the next 2 days to try to get back to from 296 now down 39 cents to about 300, 298.35-ish, I'd say, on a very short-term basis. Needs to get there, and it needs to get there pretty soon. IWM is the Russell 2000. Now we're looking at the fourth time in about 10 days, 8 days maybe, that is testing the 200-period moving average. Now is very important, because if it fails under that, it says, uh-oh, not good action in the small caps. Looking at the gold. Gold is now up 3 at 1822.8. Let's look at silver. I want to do the two together. Horrible action yesterday. Today's kind of I'm going to talk about this just in relation to the dollar and the currencies. So silver, horrible chart. Sell mode in the weekly chart. Not sell signal, but a sell mode. Gold is a little different. Gold has gone to a sell signal, but not yet a sell mode. But it doesn't look very good. And I'm just going to do this to show you. Look, the dollar had that missing leg D. There it is. Boop, goes right up over 105.36. Goes to leg D. Now let's do the technicals. It's way above the 200-period moving average of 104.74. It is also above the green 9-period moving average, which is at 104.90. It's above the 14-period moving average, and the 200 and the 9 are above the 14. So that says there's a lot of strength internally with the dollar, even though it took, my rule of 136, this took 1, 2, 3, 4, 5, bam, the sixth day it made that leg D. Now, I say normally that if there's a hiatus between peak C and your new leg D, sometimes they can actually start, if the technicals were very weak and then became very strong on that move up, that can start almost like a brand new move to the upside. I just see this as a continuation pattern. It's done the left side, right side price, time match, done everything that we were talking about in terms of patterns, cup pattern. You got your inside. Oh, I took it out. Maybe I got it in the UUP. From here to there, there's your inside track repellent zone. It got stalled right there at that level. But look, the stochastics under 80% at 73, but not bad. But it's not great. The relative strength index, this little gray line right here, that's acting very well. Not great, but very well. It's not as good as it was at that peak C at 105.36 on the dollar. So that just says to me that the dollar did have that big push to the upside, and now it might even stall but stay within a rectangle formation. In other words, it might just trade within a narrow band between maybe 106.30 and 104.80, let's just say. But wait a minute, let's look at the EUR USD. and that took a dive, and it took a lower low. It went to a leg E to the downside, continuing a little bit lower today, and it's trading right now at 1.0554, just fractionally up. It made a double top peak A. Oh no, I think that went to a B. 106916, I think that's 109. 109, yeah, there it is in the twos. Good. So it went to a peak B, and that became a B minus, and a dreaded H pattern from a B minus in the Chapman wave says, whoa, be careful. Now you have to monitor, but you don't really, because it's got the 200-period moving average as support. So that's telling me that the euro does kind of have support. The USD JPY, that is the, whoa, don't type it there. Type it here. USD JPY has gone to an alternate count G/C, still with very good technicals. The other stochastics at 81, not under 80, but at 81. So, and that, it just confirms, oh, I never drew this in. I meant to draw it in ages ago. I think maybe I did, but I lost it at some point and didn't put it back. So if I get this mouse to work for me right there, let's go. Or I like to bump into the Grand Canyon cliff on the left side and go to something that would be the low. Well, it looks to me like it's too late. Now, let's just go to this high right here. I think we're still late. There we go. So that means, here we go, make that green. Just showing you my technique of the plumb line from the left side to the right side. Yeah, it's a little, there it is. Oh, wow, one bar late. Look at that, to the plumb line. No, it wasn't the plumb line. I decided to use that long-legged wick right there. Good. Okay, there's your cup formation. So everything's been done. It's got into the strong resistance area all the way in December at about 138. And now what we're looking at, it traded today to 137.91, just under that. And it's in leg G/C. That looks to me like you could pull back and then make a leg D. So I'm trying to put this together, and I'm trying to say to you, within the context of gold, and I know a lot of you we all look at gold all the time, and especially with the gold master, Tom O'Brien, it's really forced all of us to take gold very seriously all the time, whether it's up or down, because gold is part of and a very important sector within the whole spectrum of the marketplace itself. Currencies, gold, silver, but gold more important than silver, etc. So I'm just saying to you that I think that the dollar might take a little bit of a breather here, and that might give gold a little impetus to maybe have a bounce. We'll see if that's going to happen. That means that this H pattern right here is really important, because if it closes sharply below 1810.8, that was a low of 26, that makes it much more difficult to rally sharply. But it can just kind of meander around here in a sideways action. I just want to look at high grade. Wow, I'm taking a little time here today. I am taking time. High grade copper up again in this trading band. There's the H pattern that was successful within that rectangle. I'll be back in a moment, and I want you to approach that sort of statement that was made in the den.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I just wanted to show you something. I have a kind of a rule of thumb. I have a lot of rule of thumbs. I only got 2 thumbs, but a lot of rules. So I have a pattern that I look at, and that's where there's a long, narrow rectangle. It might start off as a large rectangle, but then it just extends and extends. And the rectangle pattern can last a lot longer than your patience. Yes, it goes to the top, you think it's going to break out, then it goes to the bottom, you think it's going to break down, then you think it goes, and it doesn't. It keeps going like a little ping pong ball, ping, 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 bouncing around in this glass tube here, going from the top to the bottom to the top. And then suddenly it goes to a D, E, or F on the upside, breaks just above, and then that's the one that says if there is a long horizontal midpoint trend line and it takes it out, you're not only going to test the bottom, but you're going to break the bottom. Then what happens is there's a pop into the inside. If that pop into the inside says, I'm just here for a moment because I moved down so quickly, I didn't say goodbye to my friends, bye everybody, and then back down underneath that trend line support, that's not very good. But if it breaks after coming from the upside through the lower trend line, if it breaks that trend line and then goes back and goes to the upper side, that's usually a good sign, and it makes that whole midpoint of the long, narrow rectangle really important. So where are we? We've gone from the top to a peak E, plunged down to the 39.74.25 level, pops up, breaks to a new recovery high, and now we've taken out the midpoint. So this is really unusual action. I shouldn't say unusual action. You can see this, but in my work, a new buy signal should go to a buy mode, and that would technically have gone to a buy mode, meaning that you cannot take out this low under any condition. But most importantly, it only happens at 8:30 when there's an economic news that I call it the Eiffel Tower, sudden spike up and then give back single leg A and then fails. So this is a little different. Now you've got the Fed speaking and so forth. Every little eyebrow that he raises, or there's a little corner of his mouth that goes down instead of going up, the market is going to show that. So this is a very important fluctuation within this rectangle formation, and we're about to test this key support level. Make it very simple, 39.80 I'd say 39.82. We're about to get there right now. There it is, 39.82. Says that now you've got to be careful, because if you take out this low right here, even if later on you come back in, that just says now you've got tremendous resistance in this rectangle. It's a sneak below it. Nah, it's not great, but it's not bad. But if it starts to move sharper, and I can even draw this in as an arch formation. Remember, I'm showing you this. It doesn't. These are fractals of human nature. So these patterns you can see all the time. Look, these patterns, you can see them all the time. I can show you this in an extended version right here. This is a 10-minute chart. Same thing, rectangle formation. Went to a peak E outside the box. Look, I mean, this goes on from yesterday at 1:30, 2 o'clock. We started this narrow rectangle. That's amazing, isn't it? So within that context, this is a holding pattern after the spectacular pullback yesterday, after making, I meant to tell you this. So yesterday, I think I talked about it, but I mentioned it to my subscribers, that yesterday we were over here and having made a peak C right there. I said there's a chance that we just squeak to a peak D and then pull back. I thought pullback. I didn't expect a plunge, but we got a plunge yesterday. That was a lot more than a pullback. So within that context, all I can say is there's your uppercase A pattern straight up and straight down. In the 120-minute chart of the Dow, hit the 200-period moving average exactly. You can see the automated 33,514 automated Chapman wave resistance and support levels. That's a resistance level. It hit, and then it plunged. So this is going to be really important. But I see the reason why I say to subscribers that we're going to go long again. We were long rather aggressively. The 3 times long Dow from the low of Wednesday morning before the open. And I said, I still see strength. We had a real nice short-term small profits that we took off, and then we got stopped out for a profit, completely out of that trading position. We still have a long position from October in the 3 times long, but this is a little different. So yes, we did get back in, but all I can say is we made the stop very, very, very tight. Now let me just see. I have Earl in Seminole. Earl, how are you?
I'm sitting down here in 80-degree weather. How are you?
Oh, just rub it in, will you? Huh? We're going to get there. It's just a matter of time, long time.
Yeah, everything just takes time.
Yeah, so you want to look at, the Pro Shares, Bitcoin. This is the Pro Share long side? Yes.
Yeah, well, you can play it long or short. I'm short it. I'm wondering how close I am to get out.
Okay, so this is very interesting. This is a pattern I looked at. So let me just go to this. I think I got it on Bitcoin, and I've avoided Bitcoin for a long time. We had absolutely fabulous trade when we got the GBTC and the 12s in the short and long-term positions. And we ran it all the way up into the 40, just a huge gain. And then we got out, and we've only tried it once or twice to get back in. And I just said, I don't like it right now. But actually, I'm starting to look at it and say, I think there's a chance, and we haven't got any trade on it, but I think that there's a chance that Bitcoin will take up the slack if gold starts to drop further. I'm just thinking that out loud. There's no position. This is thinking out the box. That's all I'm doing. So with that said, I've got a cup formation that formed in the weekly chart, and I've got an arch formation that's forming in the daily. Now, the reason why I'm looking at this, and I hadn't looked at it for a little while until someone asked me the other day and said, Basil, what was that restart stuff or something you were talking about that said that Bitcoin should go back to that level? And then I remembered, that's right. So I checked it out. And what I typed in, I want to make it complicated. But in the Chapman wave methodology, an instant restart where within 3 bars after a peak D, it goes to a higher high you can count that as an alternate count. But if it keeps coming back to that level, that lower level of either the trough after peak D or the trough after peak E, it just says that it's what I call a flat base restart. But when it keeps coming back and it refuses to go much higher, I call it an instant flat base, unconventional flat base restart. The whole thing is a big, the words are very wordy, but it explains the whole thing in the words. And what happened is it suddenly spiked to that peak D, made a G/C, went to a peak D. Now, normally you'd never count this as a D, but in this particular technique, on the 16th it did. And then it came down, and now it's testing key support. So this is a really interesting moment for you to ask this question. So if you can hold on a moment, I'm going to do a little bit of work, and I'll be back with the answer that I think. Dow's down 12, S&P's up 7. Very nice breakout to the upside.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish a Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back, and we're looking at the Bitcoin. This is the BITO, which is the Bitcoin. Let me just do this. Here we are. This is the Bitcoin short position. Long position, which Earl from Seminole is short. So I'm going to go back to my continuous contract of the Bitcoin futures. And I want to just tell you that I don't want to, because you asked me, that's a separate thing. But normally, because you got into the position correctly and you are still in the position, I wouldn't want to be the one to tell you to get out of the position because I wasn't the one to get you into the position. So what I am going to say is this. I still see, based on the MACD stochastic, the 9-period under the 14-period moving average, that there's weakness in the Bitcoin. That to me is answering your question in a way that says the trend is down, but from that huge ugly candle of 4 sessions ago, these 3 last candles are really not too bad. And it says that buyers are trying to come in. But I can just tell you this, if there is a close underneath the low do you look at you must look at the Bitcoin, the BTC contract, right?
Oh, yes, sure.
Okay. So if there is a close below the low of 21.570 that was made on the 13th of February, there's a good chance that it'll at least try, doesn't have to, but at least try to get into the gap, and that would be the low of the 18th, which is at 20.815. But here's the thing. On a very short-term basis, I can see that there could be a little bit of a pop, and that pop might not take out yesterday's high of 2260, although you know that this thing, when it moves, it's kind of jittery. It has quite quick and sudden moves. But what I am looking at is, within this context, I just wanted to go to the 120-minute chart. Yeah, that was the clue to me. The 120-minute chart made this rectangle low at the bottom, a long rectangle formation, went underneath, tried to pop up, and then retested, and now it's attempting to rally. 2250, that's kind of, I don't know, would you be in if it popped to 2250, but there was a chance that it would go even lower after that, or would you get out?
Well, I've been in it for a while, and I was kind of thinking that it was going to go down and test the support level at about on the Bitcoin. That would be at about 1306.
Okay.
That's my target that I was looking at.
So, yeah, what you're doing is we're talking the same thing, because that's the 13th of February was the low of 1330, and then you've got the gap. The gap high of the 18th is 12.94. My eye says that given a little bit of time, that's where it's going, even if there's a bit of a bounce. Oh, you know what I would do? Why don't you take just a little bit off part of money management, because you've asked the question, and it's a question that you obviously have thought about a lot. And then you could either take a little bit off now, or put a stop on your BITO on some part of the position, and that's going to be a huge move that it needs to do, although, as I say, it does quick moves. And that was the high of 1383 yesterday on the BITO. So that would be at least one little bit off. But I'd rather take the profit in my hand right now and say, I just take a little bit off right now and then manage the trade. That'll give you even a little bit more cushion, because I could see it's on the 50-period moving average. I could see a little bit of a bounce. My eye says in the arch formation that there's a good chance that it wants to test and probably break the 1330 support. I don't know if that helps you, but that's the way I'm looking at it.
Yeah, that helps. And one thing I know for sure, Bitcoin reacts to the news. So
yes.
What the news is today is gonna see where it bounces or it continues down.
So that kind of confirms what we're saying, that just at this particular point for money management, it's not a bad idea just to just take a little bit off. But the position itself, because you've got a good cushion, and the 9's under the 14, the MACD's weak, the stochastic at 14, I think it's going to go down to just under 10% before this turns around significantly. I think you're right with the trend. I would say is still down.
Well, that confirms what my thinking is.
Okay,
Basil, you're the best.
Thank you. Well, let's see if BITO heard us. Maybe it heard us and it's about to thumb its nose. But anyway, that's the way I'm looking at it. Congratulations. That was a brave and pretty good trade, because in this particular environment, it's tough to have these very volatile instruments and be correct and hold it. Congratulations.
Thank you, Basil. Have
Pleasure.
a good day.
Thank you for calling. Speak to you soon. So, folks, I wanted to show you this. In the Chapman methodology, we're always looking from a buy signal. I put in an up arrow right here to a buy mode upgrade. There should be at least a D. Well, the E-mini did go to a D right there. And now it's in leg E to the up. Oops, E. Oh, very quick E, and now very quick F. And that says, oops, now we might be starting a little bit of a digestive phase. Maybe not. But anyway, that's what I'm looking at. So let me just go through this. I want to run through this again. I had a question. Where was it? Could you run through the E-mini position again? Yeah, let me do that. So a long rectangle. Let me squeeze this, and you can see exactly what I mean. Could you get a longer rectangle than this? 7:15 this morning. It stays between 39.95 and 39.84, and it stays there, and it has all these patterns: peak A, B, C, D, E, F, boom, pulls back. Peak A, B, C, D, E, F, boom, pulls back. Doesn't break out. A, B, C, D. I did use a phantom B there, but it got to a D, and it fractionally broke above, and then it made a cup formation for one final P. Very quick: A, B, C, D, E. Let me expand it so you can see what I'm doing here. A, B, C, D, E. And that was the one that retested that high in a cup formation. And the technical said, this should hold, but if it takes out, and I'm going to put this in, I didn't want to make it a messy chart, but if it takes out this halfway marker in the rectangle, long, elongated rectangle formation that can last a lot longer than your patience, make it blue and then make it a little thicker. I'm going to get rid of it in a moment. I don't like these messy things. Okay. If it goes above and then takes out this horizontal midpoint, it certainly is going to test the low of the rectangle, but probably take it out. Then it bounces up. If it bounces up and goes above the rectangle midpoint, that's kind of good. But if it reverses from there, watch out, because it could be going back just to say, hi, everybody, I forgot to say goodbye, and then it goes right back down. That's one thing. But if it goes up and then starts to trade above the trend line, and if it takes out the high of the long elongated rectangle, and that's at about 39.96, that's very good action. And lo and behold, what it did is it took out the midpoint, went just below it, and then bam, we got this peak C, pulls back. Now it's holding this support, and we go peak D, E, F. I could have called this an instant restart. I don't want to get too fancy right now. I think it's just in a trading band up 10. The E-mini futures are up 10. I'll be back in a moment. It's only a leg A in the 10-minute chart, and that could fail in that single leg A and up and down. I'll be back. Basil Chapman down 11 in the Dow, up 11 in the S&P.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let's get out of this. What I want you to look at. So with the Fed speak today, it's the questions that are asked that are important. And you know that if everything is reliant on good questions, answers are not even as important as the good questions, because a good question always solicits a good answer, or should. So all I can say is that we've known for a long time that the Fed has said 2%. What can I say? I mean, look, here's the TLT. Did I finish this? Yeah, the TLT is at 102.63. The Fed wants 2%, and you've got the TNX, which is the 10-year. Let's just go to the 10-year for now. And the 10-year is at 39.21, 3.91. It's pulled back from the peak D that it made, and that was a matching. Let me just see. I did it in the TBT, but I'll do it right here. Right here. No, it works better on the TBT. So the TBT, which is the ultra short Lehman 20-year Treasury bond ETF, had a high in the 32s back on around about the 19th or so of December. Pulls back all the way to the 26, just under 27 level. And then what does it do? It pops to the 32s again, another peak D, a peak D right here on the round about the 27th, and pulls back, takes out the left side low, but still in the 27s, and then comes back down and restarts and goes to another peak D. I don't know if I haven't got yet even a sell signal. I have to wait at least another day before I can get a sell signal. But if that's the case, that's just saying that yields are actually coming down. So what we have, what was that this morning? We had a what was that reading? It was, I'm probably not going to find it. What was it? It was a jobs report. I have to go to it. It was at 8:15, I think. I'm not going to find it. I bet it's right over here. Nope, I missed it. All right, it was a higher reading than expected, but within the ballpark, but higher. So that just says to me that within the context of what the Fed wants, they really have to pour the steam on here and raise rates and raise rates and raise rates. But the market's got its own independence. Just to a certain extent, this is my thinking, that we're going to somehow rally, fumble to the upside, and then we've got to be ready for at least a 2,500 point slide in the Dow at some stage over the next, I don't know what it is, maybe it's the next month, maybe a little bit more. It's just a horrible, because that's where the bad news comes in, where the jobs, actually, all of a sudden you start to read that maybe the jobs are diminishing. Maybe there aren't as many jobs as we heard of. So I'm preparing for that. That's why we've raised cash, and we are very selective. We are selectively long in certain areas. Okay, with that said, I want you to go to the question came in. What does that say there? Another wage growth, 0.3 a month. Okay, good, Pat Stone. That's good comments. Basil, IWO has been in an uptrend since last June. I wonder why in this environment small cap growth are preferred. Thanks. IWO, yes. So let me do this. I always forget about, here we go. IWO, I used to have all these notated backwards and forwards. The IWO is the Russell, is that the 2000? Yes, that's the 2000. And then the IW, what's the 1000? There's a 1000 as well. So Russell 2000, oh wait, this is the Russell 2000. Oh, IW, oh, this is the growth of the IWO. I always forget about that. No, I haven't actually notated this for a very long time. So what it's done now, it's holding the 200 period exponential moving average. Now this is growth. That's a really good comment, Eyeballs. So it seems to me that, and this is what I've been trying to focus on for my subscribers, that there's a rotation going on into certain sectors, number one. Within those sectors, there's a rotation going on. There are preferred stocks that are doing much better than some of the standard ones. And I think you've pinpointed something here. I want you to do the same thing with the S&P value. But right now, this is the one I'll look at, and that is A, B, C, D, E, makes a top. It is in a sell mode in the daily, the IWO, not the weekly, but a sell mode in the daily. And it's gone, there's the dreaded H, and now it's holding the 200 period moving average. So let's just make it as simple as possible. If the IWO trading at 233.60 right now, up 76 cents, on a daily basis, closes under everything points to there. 226. Oh no, that's just too far. I mean, it could reach there, but it might take a little longer. Let me just say, if it closes under 228.50 in the next week, I'm talking about Wednesday to Wednesday. By next Wednesday, if this is under that level, that is going to suggest that together with the IWM, you'll see. Look at that. This is which has a pretty much similar pattern. You're going to see lower lows. I'm just making it as simple as possible. Why? Because this huge move up from 170 to the 197, is it 199.26 high, just under 200. On the second, this consolidation is taking a little too long. It needs today's Wednesday, by Friday afternoon, Monday, it should be trading the 192s. If this is going to kick into gear again, 192 is necessary, and your IWO would also do the same thing. Slightly different pattern, but a pattern different enough for me to say I can see a difference, and I can see just a little bit more strength in the IWO, which means that's that selectivity we're talking about, and it has to get to the 240 level, and it's at 233.30 right now, up 46 cents. Definitely must not. 228 level is very important support. I hope that answers at least just covers your statement and your question. Now I want you to look at, let's see. So I want you to show you something. Look, wheat. Wheat has pulled back. This is the part of the inflationary or deflationary aspect that I think you need to keep in mind. Wheat is way down from the 1400 level down to 692 right now. Soybean is holding okay. It's near the higher range, so that's part of the inflation aspect. And actually, soybean, of course, is in so many things. Corn's at the bottom of the rung, still within a trading rectangle in the monthly chart, but gone from 680s to the 620s, now 635. And if you look at sugar, which is different, but it's part of the DBA, did make a leg E, a peak E if there's no new high today, at a recovery high. So it's a very mixed picture, but overall, if you're looking at crude oil is way down in the lower ranges, and this is crude oil. In the lower range, if you look at a monthly chart and the weekly chart, there should be some alleviation of some of the inflationary aspect. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, we're back. So the Dow is down, 95, S&P's up $1.48. So yesterday, actually for a few days, I've been looking at the stock, YEXT, Yext Inc. Content into knowledge. I had to type this in. Content into knowledge, graph, and answers. And I kind of liked what I read. I liked the chart. I thought, wow, the next pullback, I didn't see it today. Yesterday it closed at about $8.48. Just the other day it was trading in the sevens, and boom, it spikes up. And then today it had a low of 775. I was thinking of putting it in for subscribers as a screamer. I wouldn't have put it in at 70, 75. I looked at it and thought, where would I actually put in a buy? And yesterday it closed at 8.49. I would have said under 8.30 within the first 2 minutes with a tight 20-cent stop or 15-cent stop. Boom, it would have been taken out right away. And it goes from $7.75 to $9.35, trading at $9.23 today in the strong leg F in the day. It's very hard, some of these stocks. How do you trade them? What do you do? Sometimes they are such screamers that they pull back sharply, take you out, then they start their trip to the upside. So I didn't do anything, but I just wanted to show it that these things happen. Now, let me do this for the rest of the day. What I'm looking at is, once again, we're back in the rectangle, but this is all news related. I think we're going to have to wait until the Fed is Powell's finished speaking, answering questions, and as I say, it's the type of questions most of the time that senators pass are just. That's all I'll say. And the other thing to say is, what is the question that is really going to stump him? They're looking for a headliner, and I'm not sure that he's going to do that for them today. I think he's just going to be as soft as he can, just kind of back away from everything he said yesterday. That doesn't mean to say the price doesn't come down. Make it simple. If the Dow, which is trading at down minus 95, goes to minus 175, that's really after 1 o'clock. That's not good action. If it suddenly